Welcome back to another episode of the Engineering Podcast brought to you by TokenMetrics.com. You're catching us in the middle of a three-part series. This is part 2. In the previous episode, we took a look at the first 23 theses brought to us by Redphone Crypto, who put out a monster document called 69 Theses for Crypto in 2022. Bill and I picked apart and reacted numbers 1 through 23. In this episode, we're going to go from 24 to 46. So, Bill, what's up? Happy Wednesday.
Hi.
Let's jump right into it. There's no time to waste. We got a thesis number 24 from Redphone Crypto, famous crypto anon with 35,000 Twitter followers. Number 24 says, one of the biggest inhibitors to multi-chain DEXs is clunky multi-chain wallets. XDeFi is moving aggressively into the multi-chain space and could become a legit MetaMask competitor. In italics there, he's got this little disclaimer that he's invested in XDeFi, and it was in fact his first pre-sale ever. I'm not familiar with this project, but it seems within this guy's rights to pump some of his own bags if he wants. I don't know. Are you familiar with XDeFi, Bill?
Well, I'm not, but I'm familiar with the pain point that it solves. Like, can I just wake up and trade on Phantom, AVAX, Luna? Can we just all do this from one wallet? Is there any way MetaMask can do it all? Well, that's actually not the right question. The question is, what's the cross-chain DeFi wallet or cross-chain trading wallet out there, right? People pay gas fees on ETH because it's so easy to do things from MetaMask. You want to solve the ETH gas fee problem? Give me a wallet that I can connect everywhere. And this guy just gave me one. I don't care if he's invested in it. I'm like, oh my God. As soon as I'm done with the podcast, I'm checking this out. Seriously.
Yeah. Right on. Number 25. I'm not sure why we're so addicted to grouping risk into massive debt pools. Looking at you, Aave and Compound. With its isolated lending pools, I'm a big fan of RGT, which is merging with Tribe. Silo takes isolated pools a step further by limiting risk to a single token. It should get rid of that vague sense of dread you feel whenever you deposit in a pool with lots of other tokens. Bill, can you put this into English for me? I don't totally follow this one.
Yeah, there's a lot of DeFi speak here. The way I like to think of it is Rari Governance Token, RGT, came out, and it was a bunch of very young kids that came out with it, right? So the idea is the pioneers are out there. They're going to launch. You may have to have mergers and acquisition, right? One project may solve half of a problem and have to merge. So that may be a new game in crypto, okay? And, if he's talking about Silo, he's saying that there are going to be solutions to problem that, frankly, most people in crypto don't even know exist yet, which is why this guy's a great analyst. So I can only comment on one of the 3 coins mentioned. But when this guy says he knows the future of DeFi, when I see this, even though I don't totally understand it, I know when he mentions Rari, and in my opinion, that he's on to something. We have to figure out what that something is. That's going to be part of our DYOR for 2022.
Number 26. Of course, I'm long Aave too, because there's room for lots of lending approaches. See the note in the previous episode about how there's lots of different ways up the mountain, especially this early in the adoption curve. Reference the upcoming Mars protocol on Terra. And I also love the fact that Aave is working on a secret social media project. I haven't a clue what it is or what it means for Aave holders, but I've been watching that team move mountains since 2017, and I know now that the mountain movers are few and far between. Yeah, this is just basically a big endorsement of Aave as well, although it seems to be a second place endorsement to those projects mentioned on the other slide.
DeFi 1.0, or your dad's DeFi, these companies know that they have a bit of a problem with their tokenomics, right? So they've got a captured audience, they've got eyeballs, they've got people using their protocols, and they're asking themselves, what else can we do, right? We can do finance, but we could do social media. I know one DeFi protocol, Alpha, it was a disappointment in terms of price performance, but I know that they're building an NFT order book, right? Somebody's going to figure out how to have a Coinbase Pro interface for NFTs, right? So this is an indication. This is a very subtle hint that a DeFi protocol may be way more than a DeFi protocol by the end of the year, or said differently, there may not be a difference between the Wall Street and the Silicon Valley of crypto. Crypto may allow crossover, right? The hybrid play will be a theme this year.
Very good. Number 27, the sleeping giant has awakened. Yearn is getting serious about tokenomics, and YFI could begin its predestined ascent to toppling Berkshire Hathaway's share price. Full disclosure, I wasn't cool enough to farm YFI. However, I've been in love with it since its launch. I'm now honored to be part-time-ish contributor at Yearn. I mean, yeah, this guy has his finger in a little bit of everything, and one of those things is Yearn, and he likes Yearn and wants you to know about Yearn. Bill, what do we need to know about Yearn?
Well, what we need to know about Yearn is that they figured out how to change their tokenomics, right? If in DeFi 1.0, if you can figure out how to change your tokenomics, then all this capital can flood to you, and the token holders can also benefit, going back to this market of cryptos, right? In other words, our artificial intelligence at tokenmetrics.com picked up Yearn after its first rally and then dip. So this guy's essentially talking about a mega trend, not only possibly in Yearn's price, not investment advice, but he's telling you again, all right, that somebody is going to figure out DeFi, right? And you have to be careful to not ignore the coins of the past. In other words, in crypto, it's been like, okay, yeah, that all those coins pump dump, it's dead. What's next? Well, yeah, maybe, but don't underestimate protocol's ability to pivot, right? And don't underestimate how they can benefit if they pivot first, right? In a world where everyone goes, oh, wow, I need DeFi, just the way Matic 1000X when everyone said, oh, wow, I need an ETH layer 2 solution. So this is this is short and sweet, but there's a lot in here philosophically.
Mm-hmm. Yeah, very good. Number 28. I'm a huge fan of Terra, as it's a network built around one of crypto's killer use cases, stablecoins. Terra is set up to launch decentralized stablecoins for virtually any fiat currency. You can already trade the dollar, the Mongolian tugrik, South Korean won, and others on Terra. It's essentially its own Forex network. And yet, Terra is still missing some foundational infrastructure. It needs a proper DEX and credit protocol. It's getting both in the DEX Astrosport and credit protocol Mars. This will fuel a new alt season on top of Terra. Full disclosure, he's involved in Astro and Mars. I love the sound of a new alt season. I don't mind telling you that this we're in a bearish market these days, so I'd be excited to see altcoins take a huge boost. How do you interpret this point, Bill?
Well, Mike Novogratz from Galaxy Digital, kind of like my crypto hero, he got a Luna tattoo. So I'm just guessing that Luna is not going to be a one and done phenomenon based on that fact alone. Alt seasons may be comprised of everything running on a network. So in 2021, the alt season was all the layer ones running kind of one after the other, like, Solana, AVAX, Phantom. Mm-hmm. In this case, alt seasons, this is a radical concept, is that like Luna might rally, but like all the coins on Luna might also rally. The same thing could happen with Cosmos. So once layer ones have got like 5 or 6 projects, right, that could moon, just the way, ETH and DeFi 1.0 had a core 6 to 10 coins that could moon, right? You could see these isolated systems where, I don't know, XYZ hedge fund or Fidelity puts money in Luna and 6 protocols rally as everything else just goes, this isn't where it's at. So alt season by network is a radical concept and a brilliant idea, frankly.
Yeah. Number 29. Many users treat crypto exchanges like mixers. They're a nice way to move tokens between wallet addresses without having them linked together on-chain. but it does require going through a centralized provider. Privacy standards will begin to solidify in 2022. Secret, with the ticker SCRT, is constantly pushing the envelope here. I mean, already I'm just thinking about how more than any other topic, and I'm not even talking about cryptocurrency, but cryptography in general, people are beginning to understand this idea that you actually have to take privacy and security a little seriously. You'll hear the commonly thrown around phrase, not your keys, not your coins. I think more people than ever before actually are beginning to understand what that means. Just because I have a bunch of money in my Coinbase wallet doesn't mean I actually own that money. Coinbase could theoretically limit my access to that anytime they wanted to, and it's not until you're storing stuff either in cold storage or self-custodying in a hardware wallet that you actually own your crypto.
When I saw this slide, even though it's not what he's talking about, I just thought to myself that a lot of people think that they need privacy to sort of keep their money and their movements of money away from prying eyes, largely governments. And I was like, what if we flipped it around? What if the need for privacy on blockchains was driven by governments, with I guess an apostrophe at the end of the S? They need to move money around blockchains without the whole world seeing it. That would be central banks, defense departments, and intelligence agencies. So this whole idea of needing to be able to move money and at least keep it quiet, not to mention security tokens, right? You've got to be able to move, bonds and stocks back and forth without it being a front page headline that, you bought and sold the stock that particular day. Mm-hmm. So I know this is way beyond the scope of the slide, but this guy's on to something even bigger than he could imagine.
Yeah. We're fans of this thinking. I love me some good Redphone crypto. Can't recommend his newsletter enough. Redphone.substack.com. Anyway, what's number 30 here, Bill? One of the hardest decisions for a crypto investor is deciding whether to stay passive or roll their sleeves up and actually contribute to projects by getting active in a DAO. Contributing was one of the best decisions I've ever made. There are a lot of reasons why, but here are a few. Working with many of the smartest and most accomplished people on the face of the earth, pushing forward an industry that's given me so much, removing the mask that the corporate world makes you wear and showing up as you are, working with teenagers and college dropouts who forced me to step even further into the future than I might alone. I mean, a lot of the future of this stuff is going to be built by kids, and they're not going to have these highfalutin pedigrees, Ivy League computer science degrees or whatever. They're going to be nerds in their parents' basements who just grok this stuff in a level that, they're not exact. Yes, there are university level blockchain classes and courses, but there are people who are younger than that who are going to already understand this stuff much more deeply. I think about coming of age on the internet today means that I interact with technology in a way that's completely different from the way my mother does, for example. So I think, we talk about digital natives. Well, I would suggest that there might be a new category of young person, and that's the crypto native, the person who grows up knowing Web3 on the level that I grew up knowing about MySpace, for example. What do you think about working with the young folks, Bill?
Well, I mean, I think this is about active management. In other words, people diversify portfolios based on lots of things. I think people may start diversifying portfolios by actively investing in DAOs, right, of young people, right? In other words, the age range, small cap may be called young cap, right? I'm gonna allocate 10% instead of small cap emerging market stocks. It'll be 18 and under DAOs and whatever it is they're doing. So you're investing in an age range rather than an asset class.
I like it. Number 31. One of the most powerful threads I read in 2021 came from someone shutting down his or her project. Dev talent is the most precious asset in the world. Protect them, encourage them, be there when times are hard. This industry literally wouldn't exist without them. I mean, this speaks to me because, I'm a right brain person and operating in a left brain world. And so every day I am confronted by the limits of my understanding of this stuff. Now that's good because every day you get to learn a little bit more, but also it means your ego is checked on a daily basis, and the only safe card to play is, hey, I actually don't know what that means, but boy do I know what this means. You gotta stick with the smart people, the people who are actually building this stuff, because while I might have some good ideas here and there, I can't actually create a piece of fintech software. So respect the devs is basically what I'm taking away here. 32. The simplest person to trade against is yourself. Reptilian emotions like FOMO, loss aversion, and greed rip you off to important trading moments. In general, the best response is doing the opposite of what your brain suggests. I love it and I don't love it at the same time because I like my ideas, Bill. So this slide basically says, F your ideas, do the opposite.
Oh, this resonates so deeply for me. It could probably be its own podcast. So it reminds me back when I heard a story about how a chief dealer trained rookies to trade. He told the rookies to take money and lose money on purpose. So they sold when everybody was buying and they bought when everybody was selling, and they wound up making money. Right. And I do have a thought process in my mind called, fade yourself. I tell people that, when you're about to rage quit crypto, that can be the bottom. When you've got a lampshade on your head and you're partying because your P&L is so unbelievable, sell. Right.
Mm-hmm.
So sometimes you have to be cognizant of your emotions and you have to force yourself out of just the wild emotional swings. Because again, in crypto, there's no Federal Reserve back in crypto, folks. It's pure animal spirits. So, liking your ideas and acting on your ideas is one thing. Once the P&L starts moving, this person's advice is sound. Especially, if I personalize this, I'm on YouTube every day, right? It's really tempting when the market's going up to be like, oh my God, can you believe it? And it's also tempting when the market's down to go, oh my God. It is hard to fade yourself, and everyone has to be a student of monitoring their emotions,
Mm-hmm.
right? This guy told you all that in 4 sentences, which again makes me respect him even more.
Yeah, do the opposite of what you like or what you think is good.
Right.
Number 33. I thought I was evolved and empowered in the corporate world. It wasn't until I stepped into the chaos of DAOs that I realized I was an infant. In the new model of human collaboration, there's only one person who controls your destiny, you. In the world of corporates, you get rewarded for your title. In the world of DAOs, you get rewarded for your actions. I mean, come on. In the previous episode, we talked about crypto's role in culture, and this is about nothing less. This guy is talking about nothing less than the future of human collaboration. So it's going to be different. Your fancy title probably might not mean so much in the future. It's going to be all about what have you done lately, perhaps.
Right. The new definition of active portfolio management is, you're going to have stuff that you hodl, stuff that you trade, and then you're going to invest in DAOs, which is almost going to be like investing in a community that you trust to make decisions.
Mm-hmm.
Right. So rather than being in a corporate world where, you wait for everyone else to tell you what your status is, you could actually go out and trade the people on your own. Right. Don't wait for someone to give you a title. Go out and find the right people to self-organize with through DAOs. And that is how you ascend, if I got that correct.
Yeah. Number 34. All my interactions with Yearn's contributors are fascinating. I don't just learn about finance and crypto, I learn about life. For example, they have an internal mantra they call MRI. MRI is most respectful interpretation. The idea is this: if you're interacting with someone and you feel like they're being an asshole, they're probably not. More likely, it's your own insecurity. No need to get pissed off. Just give them the benefit of a doubt and assume they're having a bad day. Or they aren't great at communicating. Read their words or tone of voice with the most respectful interpretation that you can. Assume that all contributors want to make the product better. Assume good intent and good things will follow. I mean, that just seems like good life advice right there. That's not even about crypto. That's just about how to succeed as a member of a team.
Yeah, I mean, this dude just saved me $150 in self-help books with this thing right here. I just cut this thing out and tape it to my desk. That every time I get pissed off, it's almost like first the last slide was fade your emotions in markets, and this one is fade your emotions when you're dealing with other people. In other words, that voice in your head, uh, especially the one, that nagging voice in your head, is probably wrong 99% of the time. Doesn't mean your ideas are wrong, but there's that emotional twist where you kind of have to go, did that person really just ...
Uh-huh.
Okay, so it's a self-help book in a slide.
Yeah, it's great. It's great. Number 35. Bored Apes slipped CryptoPunks for a reason. Intellectual property plus non-fungible tokens is fire. It's one of the most underrated aspects of the industry right now. With IP plus NFTs, you can buy it, commercialize it, and build a brand around it. One of my favorite examples are the Robotos NFTs. A TV studio bought some, and now they're going to incorporate them into a cartoon. With IP plus NFTs, you don't own the facade, you own the soul. Oh, it's spooky, man. This is some new age stuff, but this is basically again, it comes back to that dovetail of this is about culture. One of my least favorite classes I ever took in college was on intellectual property law. It's effing complicated, and it seems like NFTs are poised to help us either simplify intellectual property or to just in general change the way we think about it. Because if there's ever a dispute over who owns what idea, then it might in the future be as easy as, well, show me the NFT that pertains to this idea, and then we know there's no issue. Yeah, I don't know, Bill. What do you think of this?
Well, when I see this, I think about this wild idea that I have, even as this market cascades lower as we're talking about this. I go, I know that other people inside big corporations know this. So, step one of the metaverse has to be people putting NFTs on their balance sheet. Like Visa did a CryptoPunk kind of for a headline, but
Mm-hmm.
NFTs are going to be legit balance sheet asset classes. And these corporations, don't care if they're paying $2 or $3 million. They definitely don't care if they're paying $200,000. So if you can get in on a project that has a floor of 1 ETH that eventually winds up on Google's balance sheet, I mean, like, the investment opportunity that this guy is implying here isn't fully understood. NFTs are going to be assets on balance sheets. So it's
Mm-hmm.
almost like, I don't know, somehow there could be a Michael Saylor for multiple classes of NFTs. It's totally mind-boggling when the rest of the world figures this out and the first headline hits, like, Facebook buys all the Bored Apes, or the NBA buys all the, lifts the entire, buys all the RumbleCons, right? So really, really fascinating. And people are underestimating that, yeah, crypto is a rebellion against the big guy, but NFTs are going to be a way where the big guys can join in. And the speculation and the increase in the asset class is being underestimated. I think people are still blowing off what can really happen here. In other words, just because a whole bunch of JPEG profile picture NFTs went to zero is not a reason to ignore this space.
Sure.
End of
Yeah, fair
bloviation.
enough. Number 36. Once upon a time, I thought DeFi yields would compress into the single digits within a few short years. Not sure that's the case anymore. We've entered the steepest part of the adoption curve. We're seeing products that simply wouldn't have been possible in the past. How many more will be born over the next decade? How many of them will launch tokens? How long will that sustain yields? Much longer than I think most of us dare believe. This is just a big DeFi bull statement. Yeah, he's saying we have not yet begun to fight when it comes to DeFi, and I guess he's mostly talking about passive income, really, from staking and so on. What do you think, Bill?
Well, I read this and I'm like, you know what this guy's really talking about? He's talking about real interest rates, right? In other words, how can I get a yield that when I subtract inflation from it, I still have money left over? So inflation is reported at 7, and it's probably more like 15, then a 20% yield isn't necessarily a trap, not investment advice, right? But what this guy is saying is in an environment where there's almost no control over inflation, people are going to be in the DeFi world looking for higher yield, and the DeFi world may be the most efficient market out there. Remember, no central banks. So it may be the only place to protect the purchasing power of your money, right? So I know that's broad and a finance class unto itself. But again, when this guy does a slide and he gives you 8 sentences, it's almost like each slide feels like a book or a podcast on its own. DeFi equals protecting your money from inflation.
Yeah, right on. Let's hit it. Number 37 here. I talk a lot about the importance of cross-chain swaps, but ultimately they're a joke. My mom will never learn how to do them. Neither will most of my friends, even those who work in IT. This is the heyday of infrastructure development, and their UIs feel like shiny hobo patches with Band-Aid solutions. All this stuff that you and I do on weekends is specialized arcane knowledge that will be abstracted away. Do not build for the technological prowess of your current users. Build for their parents and grandparents, or else you'll be left behind. Now, this is really speaking right to me because I'm a big old nerd. I love going down complicated rabbit holes. But then the burden becomes, how do you explain this to, fill in the blank person born before 1975 who might not be immediately adept at this kind of thing? So he's as earlier in this slide, he was praising the developers. Now he kind of seems to be giving them a reminder. Hey, by the way, you have to design for the lowest common denominator.
Right. In crypto, the guys that know the technical details see the value proposition before everyone else. For crypto to go mainstream, it can't be super complicated, right? It's got to be a wallet, a couple of exchanges, just like in stocks, it's, your brokerage account and 3 brokers to choose from. So, when they build, it's very tempting to build for just the tech savvy, but I think Mr. Market is going to start rewarding anybody who can get people onboarded, like institutions, or, the saying your dad's crypto isn't going to be a joke anymore. Your dad's crypto may be the next 100x.
Yeah. Number 38. Attention in crypto land is fragmented. If you don't have a strategy to defrag your own attention, you're effed. The world belongs to those who've learned to focus. Again, just good life advice. Whatever you focus on is what you become. So if you're active in crypto, what you pay attention to in crypto is very important. I don't know. What does this mean to you, Bill?
Well, it means you can't start a project and have it be a DeFi, metaverse, NFT, make scrambled eggs and toast.
Yeah.
All at the same time, right? Everybody wants to do everything, but you have to start out focused on something, be good at that, then move on. Really, easy to say, but I remember when internet stocks first came out, I mean, everybody knew what was going to happen. Everybody knew the theme, and everybody wanted to just boil the ocean, but it doesn't work that way, right? You got to do one thing at a time.
Mm-hmm. Number 39. Anything your blockchain can do, mine can do too. ZK rollups, for example, won't just solve Ethereum's scaling problems. They'll solve problems for other chains too. The war isn't necessarily to market first. It's to bring in new souls and get them comfortable in your ecosystem. For at least a few years, these non-Ethereum-based ecosystems will be a lot stickier than most people would have you believe. Global crypto adoption is still under 2%. There's a statistic right there. Growth will happen everywhere, and that's why I still believe in a multi-chain future. This is about the importance of interoperability. People are going to want to stick to their preferred blockchains because at the end of the day, this is really just about moving value from one place to another. Well, suddenly there's a problem when different blockchains are incompatible with each other. So this just kind of underscores the importance of interoperability, making every crypto compatible with every other crypto.
Right. As price thrashes around, they're building, building, building. Right. And, just because Avalanche went from, 150 to 80 isn't a reason to give up on, say, Avalanche or Project X, not investment advice, right? Like if ETH 2.0 is delayed, it's not the end of ETH because eventually, you're going to have more than one way, more than one road to travel into Manhattan. You're going to have more than one way to do DeFi, NFTs, and metaverse,
Mm-hmm.
right? At the end of the day, it's all going to come out in the wash, so the volatility is something you have to manage, but, being a layer one maximalist may not make sense.
Mm-hmm. Let's hit number 40 here. Early on in my crypto journey, I stopped betting on white papers and started betting on humans who deliver results. I mean, what to say beyond, yeah, the people associated with the project actually matter. That's why one of the things that our research team looks at Token Metrics when we're grading projects is what other successes has this team had in the past? What other singles, triples, home runs have they hit before?
Right. In other words, and he's going to go into this more later, but investing is about the story, and the people involved are a critical component of that story. Who's telling you the story and who's behind it. And that even goes for VCs, dare I say it, right? Venture capitalists are kind of viewed as bad actors in some ways. Maybe not, right? Maybe you have to change your definition of, oh, that person's good or that person's bad, and just say, okay, who are these people? How smart are they? And can they execute?
Right on. Number 41. One of my favorite parts of the past year has been working with people in their teens and early 20s. They teach me as much as any of my mentors, many of whom are retiring. If you run a project or fund and you don't have a young person on your team, you have blind spots the size of a Cybertruck. Yeah, I mean, we've already talked about it in this episode. The young folks are in on this, and they're already part of the team building this stuff. So even if you are a seasoned developer in your 50s or close to retirement otherwise, there are people who are much younger than you who are at least as capable as you. They may not have a few decades of work experience, but they've already wrapped their head around this new and emergent topic pretty satisfactorily.
Right. 2 points here. At Token Metrics, we got a lot of young people, right? A lot of young people, right? And young people can go from young people to analysts quickly, right? And there are new people that can also add value. So there's young people, there's new people. They can see things that you can't, right? This is me talking to myself as a 50-year-old, right? I can see certain things and I'll help people. And then there are people who can see other things and there's no limit, right? It's like, oh, this person's 15. Okay, well, that doesn't mean they can't learn this. Like, I want to teach crypto to a young person because that young person may help teach me crypto in 3 months, 6 months, 2 years, whatever, etc. So this guy is totally right about this.
Yeah. Let's hit number 42. I've never been a single issue voter in my life, but I don't give an F anymore. I will support and vote for anyone who understands and will defend the industry in 2022. So I'm immediately thinking of the new mayor of New York City right now. I forget his exact name. I read some commentary basically stating that this mayor has gone out of his way to publicly signal that he's hip with crypto. Now, maybe that's a publicity play. Maybe he just wants the good PR. Even if it is just that surface level of, hey, look at me, I can say Bitcoin in a speech, it's a strong sign that this guy is paying attention to what people care about. Bill, what do you think about this intersection between crypto and politics? I would suggest as a broad intersection. How important is it that politicians should be understanding this stuff?
Okay, so I would view crypto as like a political confessional, right? you can go in, confess your political sins quietly, come out, say 3 crypto Hail Marys, and the next thing you know, you've been forgiven, right? Crypto is a clean slate in politics. It's a slate cleaner, right? Oh, you used to believe in this and those ideas were wrong, immoral, whatever. Who cares? Hey, I'm in crypto and I'm going to vote or speak out, or especially if you vote for something that helps crypto. Everyone in crypto is going to immediately go over there, including me, and not care about your past, right? I only care about what you're doing for crypto. What you've done in the past is irrelevant. And when politicians figure this out, I mean, you could literally see a presidential debate one day where one guy's talking Bitcoin and another guy's talking Ethereum. It could happen.
What a world that will be.
Yes.
Number 43. Some of the young people I meet talk about Ethereum with disdain. It's like they've taken a bite of a pretty looking apple full of worms. They don't merely dislike Ethereum, they think it's elitist bullshit posturing as a platform of the people. I love Ethereum from the depths of my soul, and still, I'm not sure that I disagree. We need ETH 2.0, and we need layer 2s to onboard normies directly. I can only lend more momentum to this outcry, this very popular outcry that gas fees are too high. The gas fees are too damn high, and we need to fix it. And yeah, I don't know, Bill, what do you think?
Okay, so this goes back to the fade yourself principle, right? It is, especially since there was no Santa rally in Ethereum like there was supposed to be. There was really no January rally in Ethereum. At the moment where you say ETH is dead, it's over, right? That's probably when ETH turns around and goes to 10K. So yes, ETH is not fair, right? But life is not fair, right? Okay. So if ETH is going to be a powerful network, one of the ways you got to build a powerful network is you got to pay the freight, right? Like stuff doesn't get built for free. So those high gas prices spurred innovation, right? Would you, if there were no gas fees on ETH, would you have Solana, Avalanche, Phantom, and no. So the more gravy in the kitchen, the more dogs at the door, right? The gravy is the miners and the people making money from the Ethereum network, right? And you know what? The longer ETH is a pain in the ass, the more dogs can show up at the door, which means more innovation.
Mm-hmm. Let's hit number 44. 2022 will be the year of the DAO. We'll see them launch in hundreds of niches that bear virtually no resemblance to today's finance-focused DAOs. Pokemon fans, tennis players, geneticists, DAOs incoming by the thousands. Yeah, I can think of 3 big ones already. So at the end of last year, we had Constitution DAO, which was quite, while it failed in its mission to buy the historical copy of the Constitution, it absolutely succeeded in getting a whole bunch of people scratching their heads. What is this DAO stuff? It's a chat room with a bank account, kinda. So there's one big one, Constitution DAO. Then 2 more I'm excited about personally. Blockbuster DAO. Let's revitalize this defunct brand and bring it back as a Netflix competitor. And then the Free Ross DAO. Let's get crypto's, I don't know exactly how to talk about it, like a guy who's in federal prison for life, who's become a darling of crypto at large for creating the Silk Road, although now he leads a much different life. Let's start a DAO that basically seeks to get this guy out of jail, whatever it takes. Bill, I completely think DAOs are a huge narrative for 2022. I suspect you agree.
Oh, absolutely. So to start with, first of all, in the cryptoverse, you heard about the revival of Free Ross as a theme from our show host himself. So we were talking about that before, everyone else was. Okay, end of horn tooting. DAOs in legacy terms, it's called a fund of funds, right? In other words, part of your portfolio management for the future in crypto is going to be how much money are you going to give to groups of people and trust them to invest, right? And then there'll be eventually DAOs of DAOs, right? So you're going to be giving money to people Maybe another way to put it for legacy investors is it's like a managed account. You're essentially going to hire portfolio managers, except it'll be a decentralized group of people voting
Right.
on how to invest.
Yeah. A bunch of people disagreeing, and that disagreement is high value.
Right.
Let's hit number 45. Was talking crypto and drinking bourbon with a normie friend in finance recently. Why do you always want to change everything? He asked. It took that question for me to realize how unnatural all of us early adopters are. Normies fear change. People like us swim naked in it. Well, what good would this document be without a little bit of glad handing? You know, we're here, we're early, and we're unapologetic. Get on board or don't. Yeah, I mean, I dig it. This guy's waving a flag and saying, you know, you have to think fearlessly and not be afraid of being early and looking silly.
Right. And then there's that comment, why do you always want to change everything? Well, the answer is because everything's going to change.
Yeah,
Right.
well
I
put.
mean,
Well
you know,
put.
legacy people have been lobotomized by quantitative easing. And the moment that any of that shifts, people are going to be like, wow, look, there's this alternative asset class. Oh, wait, there's crypto. You know what I'm saying? I mean, change is going to come.
Yeah, change is the only constant. Here we are. Last thesis for this episode, number 46. Last year at this time, I was bullish AF on DeFi and derivatives. Both were utterly destroyed by NFTs, play to earn, and alt layer ones in 2021. Two takeaways from this. My bullishness on DeFi and derivatives has not waned, and whatever everyone's talking about right now will not be what people are talking about at the start of 2023. Yeah, again, the change is the only constant. What's cool today is not going to be cool next year. What people are excited about now is not what they're going to be excited about in 1 month, 6 months, and so on. Bill, I wonder if you could speak specifically to this NFT comment. Like, even if NFTs are the hot ticket right now, this guy's basically saying DeFi still has room to run. Yeah.
Yeah. I mean, people need yield. Period. They need real yields, not negative yields. So DeFi is going to be there. I'm with this guy on things like the future of derivatives, the future of Wall Street on the blockchain, even the future of money beyond Bitcoin like Dash and Nano. I'm not giving up on this. There's no way you're not going to have a Bored Ape futures contract. There's no way, right? There's no way you're not going to have a metaverse index options market, right? Okay. Yeah. So I'm totally with this guy on, you know, I believe in certain themes and, you know, carry me out if I'm wrong.
Yeah, perfect. Well, let's put a plug in this here for now. You've just watched part 2 of our 3-part series in which Dylan and Bill pick apart Red Phone Crypto's 69 theses for 2022 in crypto. Be sure to stay tuned for Friday's episode where we'll go through the last third of this deck. We'll hit items 47 through 69. If you like what we're doing here and you want to support us, one of the best ways you can do that is to either subscribe to tokenmetrics.com or just go ahead and follow Token Metrics on YouTube. Give this video a like, tell some people about it. We are here to help you make money in crypto. We are here to help you sort signal from noise so that you can make more profitable investment decisions. Thanks for tuning in, and we'll see you on the next one.